So let's start with GU then. Looking at the weekly chart first. As always, we're looking at a longer term perspective. This is the trend line I've been pointing out for the last few weeks. It's the trend line defining the current downtrend. And if I'm not mistaken, we were talking about bearish movement in GU last week. I think some of you were here last week and can recall. We were talking about two possible scenarios. One was this ABC correction, in which we are currently on this pair, and then a possible 1, 2, 3, 4, 5 targeting way lower, around 150. And we were saying that we're looking at the worst case scenario, what the market could give us. Since both of them were bearish, we were looking at the ABC, but just as well, the market could see something much bigger than that. Now, I think last week we were somewhere around here, okay, right after this drop. So we had already confirmed that this move up was a retracement. So we were looking for more downside. Since then, the market did go lower indeed, about 100 pips since these levels. Okay. So we're following this formation. Now we are not really at the starting point of this move. So right now you will have to time your trade on another chart, maybe a smaller chart. And actually there's, well, according to what I see, and I will show you on smaller charts, I think we might be in a moment of correction here on GU. Okay, but let's see, let's not anticipate. There is nothing so far indicating longs on this daily chart. Okay, we have this previous level of support that worked as support again and then as resistance. All right, so we are into this bearish wave. I don't see it ending anytime soon. Actually, there's no sign of any bullishness on this daily chart. Okay, I see the MACD starting somewhat to flatten down, so that means, well, since it's the end of the year and anything is possible, even abrupt moves on this low liquidity market conditions, well, maybe it's safer to just reduce exposure and maybe just take some profit, since we are at the first target, the 127 extension of this corrective wave up. So this was the correction. We already hit the 127 twice, okay, in the last week. My waves tell me there's more to come, but there might be correction right after this level, maybe up to 155.50, maybe even slightly higher to 156, and then we'll see if it has enough strength to continue lower. So first thing that we have to notice here, direction is down, but we are close to a level of support that hasn't yet proved itself solid. But it doesn't seem, not even on this daily chart, which is clearly bearish, it doesn't seem to me like the best place to initiate shorts. Okay, maybe if you are short from a higher level to just hold on to positions, that seems more logical, but to initiate shorts around here, based on this setup, it seems to me a bit too late. Now let's continue forward on the 4-hour chart. Let's see how the indicators look, and if we have any reason to look up. Actually, we do. Now what we have here is, the way I see this wave formation, it looks to me like a 1, 2, 3, 4, 5 with a failure here at the wave 5. We have actually a close. This closed at 154.67, which is higher than the previous close. So that means the current small wave here, we will get a better look on the 1-hour chart. This small wave here is longer than the last move down. So that's already indicating that there's a pause here, there's a double bottom. So some retracements are to be expected. Okay, if that is true, and if we are looking indeed to buy with quite aggressively, we would buy around here with stops around 150, 153.60, 153.70. That's about 50 pips of risk for a target of about 100. We'll see if this is worth it. On this chart, we don't have any signal to buy, but we do have the setup, let's say, the preparation for a long signal coming later on. The indicators don't clear us for long. Actually, the tricks and the MACD are bullish, both of them, somewhat losing the ground right now, but still bullish, with a rate of change that it's actually quite flat, and I think it looks down. That's corresponding pretty much with the price action of over the last 6 hours. I can't say that this 4-hour chart clears the view. Alright, now let's see the 1-hour chart. Okay, now this is what I was saying just now. We have a move up that breaks the previous high, so that somewhat paves the way for a long signal. And we have a correction that right now, I think it's around a 50% fib. Let's fib this move. Actually, it almost touched the 61.8. So indeed, it tells me aggressively this would be an entry for a long with a stop around 153.80. I'll mark this setup for now. Okay, we need to confirm it on the rainbow as well. I doubt the rainbow will agree, but let's see. Okay, so this will be the stop area around 153.80, not earlier than that, because it might still bounce off the 78 pip, while still remaining in the same possible bullish formation, a deep retracement. I think to be even safer, 53.75, just to be away from the 78 fib, where it might spike again. Now this is, again, I'm saying it's an aggressive setup. So the entry would be around, let's say around here. That gives me around 50 pips stop. Okay, entry at 54.25, let's say right now, right here. Okay, stops around 53.75. The risk is clearly defined here. And then we have possibility of a move towards at least 155.50, so that gives me at least a 125 pips of target, about 2.5 the risk taken. Now the risk to reward is good because we're entering while the market is going down. This is why I say this is an aggressive setup. Okay, the stop is relatively small for a 1 hour, 4 hour setup, 50 pips only. Okay, this is the stop I'm usually using for an intraday 15-minute setup, and the target about 125. But in case things work out, you do take this trade and things work out, and you reach about 54.70, 54.80. Well, it would really be in your best interest not to close the trade there. At most, just protect your entry with stop at break even and allow the market to go, because in that case you will be proven right by the market, and you will be also confirmed into this entry at a very good level. So you practically, if we stop here, you get the best price. All right, I'll reconfirm this setup by looking at the rainbow. Now let's see the other issues here. Yeah, you see the last candle, the one that went down through this previous support at 54.25, actually failed to close in bearish territory and closed quite bullish at 54.33, and now we are retesting the same area. Basically, what I see here is the dynamic of a retracement.